Motherson Sumi shares are down by 25% from its 52-week high levels as India's largest producer of automotive wiring harness is facing a slowdown in demand in domestic as well as international markets. Let's do a three-point analysis of whether this could be a buying opportunity for investors. 1. Q2 was impacted by disappointing India business. Well, in Q2, the company's performance that was in line with expectations, its results were actually saved by pleasant surprises from its overseas subsidiaries SMP and PKC. Motherson Sumi saw a consolidated revenue growth by 5.4% year-on-year in Q2 FY20. Now, its overall growth, however, suffered because of a 17.2% decline in domestic business, led by the overall weakness in passenger vehicle demand. EBITDA margin contracted by 32 basis points year-on-year and came in at 8%. EBITDA margin was affected by the decline in margins in India and SMP. PKC, however, saw margins expand by 290 basis points. 2. What's the industry outlook right now? Well, multiple challenges such as an increase in the total cost of ownership due to mandatory long-term insurance and implementation of the safety regulations as well as higher cost of retail finance have hampered the demand for passenger vehicle segment in India. Now, the global automobile market slowdown has also affected Motherson Sumi's performance as well. The slowdown was further aggravated by the implementation of worldwide harmonized light vehicle test procedure. Sales of Class 8 trucks in North America have also slowed. These trucks contribute more than 45% of PKC's revenue as well. Now, we believe that the slowdown is cyclical and the long-term demand scenario in India as well as abroad will improve. 3. Is this soft patch a buying opportunity? Well, despite a tough environment, Motherson Sumi executed new orders worth 3.7 billion euros in the first half of the current financial year. Now, the global shift to electric vehicles is definitely likely to be a key growth driver going forward. Now, due to a weak demand outlook, Motherson Sumi's shares are down 25% from the 52-week highs, and they currently trade at 23.4 times FY21 projected earnings, which is reasonable when you compare it to the 3-year average of 35 times. Therefore, investors may accumulate the stock at current levels.